this video, we are reviewing our outlook for 2022 with 5 points we want to highlight. Firstly, our outlook for 2022 is positive, given the supportive backdrop for equity markets, supported by a more prolonged positive economic cycle, although the Omicron variant has the potential to disrupt. We do think that we are facing a more prolonged positive economic cycle, supported by the sizable infrastructure spending that has been unveiled. Secondly, 22 will confirm whether inflation is frictional and therefore transitory, whilst we believe stagflation is a low probability event. The frictional inflation has the potential to put pressure on margins, however, and investors need to bear that in mind. As a result, thirdly, we want to focus on companies with more consistent growth profiles after a strong year of recovery. Given the higher equity valuations, we expect 2022 to be a year of lower returns for investors after what has been a strong 21 for equity returns globally. The lower earnings growth expectations in 22 and risk of margin pressure from the higher frictional inflationary pressures do emphasize the need to focus on companies with superior pricing power and therefore lower downside risk to margins, and companies offering more consistent growth profiles. Fourthly, the sustainability focus will remain high in the market in the post-pandemic recovery, coming on the heels of the COP26 summit, which has increased focus on sustainability in particular. And fifth, thematic opportunities remain plentiful in a world transitioning towards sustainability. Our three megatrends, which are demographic changes, future of technology, and resource scarcity, provide us with great opportunities to capture long-term structural growth themes. These are well aligned within a world transitioning towards a more sustainable future, with demographic changes aligned with sustainable living, future of technology aligned with decarbonization, and resource scarcity aligned with climate change. Finally, there are risks for investors that we need to bear in mind, notably in terms of execution risk on monetary policies, which could bring volatility, policy implementation on infrastructure spending, given how critical that spending is to the economic growth. There are also other risks, such as corporate tax rates increasing, putting downward pressure on earnings, localized pandemic relapse risks, putting pressure on economic momentum, and also further exacerbating supply chain disruptions, and stronger and more prolonged frictional inflationary pressures, which could lead to more pronounced margin pressure for corporates. And finally, geopolitical risks need to be borne in mind, with tensions potentially becoming more open, notably in terms of China versus rest of the world. Finally, we predict an ever more disruptive decade continuing to affirm itself in 22, with many risks of disruptions for existing business models in a rapidly transitioning world, but also many areas of opportunities coming from increased investments and innovation in areas that enable a faster transition towards a more sustainable world. Thank you for listening. It's Zehrid Osmani.